everyone, and thank you so much for watching my channel, The Witty Turtle. Now, the next thing that we are going to revise is conditions to be satisfied for claiming deduction under this section, right? So, basically, there are two conditions. What are those? The first condition is that the specified business or that particular business should be a new one, right? It should be a new business altogether. Like, it should not be set up by splitting up an existing business or reconstructing an existing business, right? It should be a brand new business. The second condition says the plant and machinery used in that business should be new. It should also be new, but the amount of second hand plant and machinery is allowed only up to 20% of the total plant and machinery requirement, right? For example, the total plant and machinery requirement is of 100 crores, right? But if you are having only 20 crores or less than 20 crores of second hand plant and machinery, then again that will be allowed under this section, right? And uh, under this section another thing is said, that is your if the plant and machinery is imported from a foreign country, right, then that will not be considered as a second hand plant and machinery, right? Why? Because जिस पे इनकम टैक्स एक्ट में डिडक्शन नहीं मिला हुआ है, on which plant and machinery no deduction has earlier been claimed under your income tax act, so all those plant and machinery are treated as a brand new plant and machinery, right? So what does the law say? Such plant and machinery was not used in India at any time prior to the date of its installation by the SSE. For example, in this case, I am having a specified business, a new business which comes under your specified business, and I have imported certain machinery, certain second hand plant and machinery from Germany, let's say, right? But before the date of installation at my place, at my factory, that was not used in India, right? I, for example, I installed the machinery on 1st April 2023, and before that it was not used in India, then I can claim deduction for that second hand imported plant and machinery, right? Now, the second point says that obviously it was imported from a foreign country to India. And the third point says that no deduction in respect of depreciation of such plant and machinery has been allowed to any other person under Income Tax Act before the date of installation at my factory, right? I am the SSE. So, before I installed the machinery at my factory, nobody else had earlier claimed any deduction under this income tax act for that particular plant and machinery, right? So what are the conditions need to be satisfied for claiming deduction under section 3580? Simply there are only two conditions. The first one says the business should be a brand new business, and the second one is that the plant and machinery used for the business purpose should be new, right? But second hand plant and machinery can be allowed up to 20% of the total plant and machinery requirement of the business, right? Again, if it is imported from a foreign country and earlier no deduction has been claimed in India under Income Tax Act for that particular plant and machinery, then again it is allowed, right? I hope this is clear. Now you might be thinking that whether section 35 AD is an optional section or it is a mandatory one. So it is an optional section. If the SSE wants to opt for this section to claim, to avail all the facilities or all the tax benefits, then the SSE can avail the benefits by adopting to this particular section. So this is an optional section. Now the second question is that um, here in this particular section, no depreciation is allowed on the plant and machinery. Why? Because 100% deduction is allowed. So why to claim depreciation, right? Another thing is that every year's capital expenditure is allowed in that previous year. In the previous year in which the expenditure was incurred, in that year only the expenditure will be allowed. Lastly, um, if there is a choice for you to claim deduction under section 35 AD or section 80 IA or 80 IB, right? So in that case, always section 35 AD is more beneficial, right? So claiming a deduction under section 35 AD is always more optional, right? Now coming to another thing that says that loss from specified business can be set off against profit from specified business only, right? Profit from specified business only. This we already studied in the first class, in the very first class of PGBP only, right? That specified business ka loss, specified business ka profit, they can only be set off. Here, another additional conditions are laid down for petroleum and natural gas business, that the organization running this particular business must be only Indian companies, right? Only Indian companies which are incorporated under your Companies Act 2013 or any other previous company law, right? The first point is that it should be an Indian company. The second point is that it must be approved from PNGRB, that is your Petroleum and Natural Gas Regulatory Board. It must be approved from PNGRB. And also the last point, which is very important, it says that whatever is your capacity, whatever is your pipeline capacity, if it is a petroleum pipeline, then you should keep at least one fourth of the total capacity to be used by any other person other than the SSE. Like if I say in simple language, then it says that the one fourth of the total capacity of petroleum pipelines must be kept aside to be used by others, right? And if it is for natural gas, the pipelines, one third of the total capacity should be kept aside to be used by the others, right? This was all about your petroleum and natural gas business. So there are three conditions. The first one is it must be an Indian company. Secondly, it must be approved by Petroleum and Natural Gas Regulatory Board, PNGRB. And lastly, pipelines part which are supposed to be used by others. For petroleum pipelines, it is one fourth of the total capacity, and for natural gas, it is one third of the natural capacity, right? I hope this is clear to you. Now coming to the last point of section 35 AD, which speaks about any asset in respect of which a deduction has been claimed under section 35 AD. The like the deduction has been claimed and it is also allowed, right? Allowed to the SSE. So in that case, the SSE is supposed to use that particular asset for his business for at least 8 years, right? For at least 8 years. Before the completion of 8 years, he cannot transfer the asset to another business, or he cannot sell it off, right? And this duration of 8 years starts from the previous year in which that asset was acquired or the asset was constructed, right? So now the question arises, if such asset is used for the purpose of other than the specified business during such period, like before the completion of 8 years, if it is used for another business, right? So what happens in that case? The amount of deduction claimed under section 35 AD minus the amount of depreciation if 35 AD was not applicable, right? You have to calculate the amount of depreciation agar 35 AD na liya hota, so you have to deduct that from the amount of deduction claimed. Whatever will be the residual amount, that will be your PGBP. That will be your PGBP income, or that will be taxable as your PGBP, right? I hope this is clear. So it says that total amount of deductions so claimed or allowed in one or more previous years, right? Total amount of deduction claimed or allowed minus the amount of depreciation allowable under section 32 if no deduction under this particular section was allowed. So it means अगर 35 AD ना मिला होता तो depreciation कितना होता? That amount will be reduced from the total amount of deduction so claimed and allowed, and the last remaining amount will be taxable as PGBP income, right? I hope this section is clear to you. And if you find this video helpful and this video series beneficial for you, then please hit the like button, subscribe to my channel, the Witty Turtle. Don't forget to hit the bell icon so that tomorrow you will be notified when I'll upload a new video on PGBP, right? And yes, don't forget to share this video with your CA and CMA final friends.